Dave White. We normally talk technology in this segment on Fridays. Tom's out at the Gold Show, and I think he's going to be there Monday and part of Tuesday. He will be back with us next week, I think Tuesday night and Wednesday night. In the meantime, I'm keeping his chair warm, and we're watching these markets. We'll go right to it. So how do we end the day? Well, the Dow was up 54 points, and we closed at, 16,400. Well, is that right? I'm looking at the wrong number out here. 16,064, excuse me. Probably scared a few people up there. 54 points. We were up 22 points on the NASDAQ, closing at 3,991, and up 9 points on the S&P cash, closed at 1804. We're looking at a chart now of the S&P cash, and we've got a line up here. Doesn't really show a whole lot of weakness. We are going through the previous highs we had just a few days ago on the 15th. We had almost 3.3 billion shares on the consolidated New York Stock Exchange tape. We're going to come in with a little less than 3 today. So volume is getting light. We are getting close to a long weekend, and there is a bias to these long weekends that if you get light volume, a lot of times you will move up on light volume all the way into that close. I suspect that the market is now waiting for the numbers from Black Friday sales. So next week from today, the market will close early. But because Walmart, Target, a lot of those stores are going to open at 6 o'clock on Thursday night, we're probably going to start seeing a little bit of action into Friday's numbers that normally we do not get. And, of course, by Monday, there'll be a full accounting, and a lot of people will get a good idea at just what stores are going to be doing well, which stores are not going to be doing well, and which products are going to be moving and those that are not going to be moving. But we see no real breakout here. The volume is lighter. That is inconsequential, I suspect, in the next 3 days. So not a whole lot that's going to change, I suspect. But it is not uncommon to get this late in the year with big profits and everybody sit on them till the end of the year. That means that we may have seen all the tax selling on the stocks that have not been doing well, and the desire may be to hold on to these stocks to the first of the year and put any gains into next year. And then that gives you, for the most part, at least 3 months, in some cases a lot longer, to pay your taxes on them. A lot of people will wait for those. In my opinion, this market is setting up very much like it was in 2000, very light volumes as you go into the very end of the year. And, of course, a lot of undecideds coming out with the Fed at the beginning of the year. But we've got probably one big chance for any pullback before the end of the year. That will be on next Friday's numbers. You might carry that into that Monday, the next day, the next trading day. But if you don't get them in those couple of days, we're probably going to see a very slow melt up into the end of the year. And I would not be surprised if we closed at 1825 or 1830 on the S&P cash. I mean, really, you could see the volatility between 1 or 2 days, and that may just be one of those things where we're up 5 points one day, down 3 points the next, up 6 points, 4 points the next. And you could see just a lot of that back and fill to close only slightly higher. The reason I'm saying only slightly higher is there's been no sign of strength in this market. So there isn't a big push as we've broken through previous highs. And when you get that, you just need to be extremely wary. We've had a lot of stocks that have been bubblicious, and they've blown off the top. We've seen Tesla. Let's go to look at that real quick. Not a lot of action today, but what we have seen are just these huge rolls off the top on a lot of these very speculative stocks, mostly in the technology area. Tesla, probably very easy to see that it ran all the way up to, $194.50. At that price, it was trading like it was selling 350,000 cars a year. It's selling actually it's selling 25,000 cars a year now. To get to anywhere close to 350,000, they would have to build a great deal of more factories, put out dealers, and expand into foreign marketplaces. They pretty much started falling off and on heavy volume when they were starting talking about building these factories. The reason is they were making very good margins for cars, normally somewhere around 5 or 6% for GM or Ford or Chrysler or even BMW, maybe just a little higher, maybe 8% margins on their product. They were making 25% margins. That only lasts so long. Once you actually start having to expand, build battery factories, build factories to make sure your product can get to market, your profit margins really start to take a hit. And, of course, legal action in many states, only selling these cars in 14 states. In many states, they were going to have local dealers and cut that 25% margin down with a split with local dealers. A model that probably would not last that long. Even if it did, they were still priced at a market level where they were selling 350,000 cars, probably pricing in 5 to 8 years of growth, and probably a very bad bet at those levels. But, of course, these markets have seen these stocks blow off from very high levels and back into these lower levels. Probably another 15 points down on Tesla would take it to the 104 low that was seen back July 17th. Of course, everybody very interested in gold around TFNN. Gold did very little to nothing out here, went sideways, which is probably one of the few bullish signs we've had. Gold has been selling off into the weekends. It's still, especially if you look at the GLD, still has a high volume low that's untested at 114.68. A lot of people have been talking about how gold likes to set highs and lows at the gold show, and maybe we're going to see some kind of action Monday or Tuesday. Of course, gold probably dislikes finding people that are traveling during that time like Tom is, and probably having a lot of action. It always seems to be that way. As soon as you walk out the door, some news comes across the ticker. But we're taking calls today at 877-927-6648. If you would like to call and talk about technology today, we're going to be talking about what's happened in technology this week. But we'll entertain your phone calls, at least in the broad area of technology today. But not a whole lot else to say out there now, other than look for a slow fade up probably into Wednesday. And at that point, we're probably going to see some action. If no action then, probably not until the 1st of January will we see a break or a trend or a huge move. So it may be a quiet month in December out here without action next week. Trying to think of anything else. Well, earlier in this week, if you listened to TFNN, I had some fairly decent calls and projected what were known as a blow-off top. In blow-off tops, we actually, in my newsletter, had Voxeljet, which is one of the 3D printing companies. We were short this thing about $67. Of course, it went down to $32. We actually covered it at the close just under, I think, right around $38 a couple of days ago. A little bit of reaction and a low yesterday. But these stocks had been trading at incredibly high valuations compared to what was underlying the stocks. We were also short DDD, 3D Systems. And this is where I'm getting into the idea we're seeing a great deal, not only just in the 3D space, but other spaces. So we saw Netflix actually do a 3-gap play and blow off and come back down. This is actually getting Netflix probably getting to the point where we're going to have to look at it again for the next leg down. And just a wicked one-day move out here that we did catch in the daily newsletter. But keep an eye on it. Anyway, give me a call, 877-927-6648. And we're going to get into the news when we get back.